Hello everybody, this is Japhet from the Art of Trading. I'm back with another tutorial video for today. It's a Sunday, it's a weekend, so I'm going to be teaching you guys a little bit about time frames and how I use the different time frames and why I use them. So before we get right into that, let's go to our subscribe button right here. If you're new to the channel, don't forget to hit that subscribe button. It takes like a second to do it, and if you're a returning viewer, don't forget to hit that thumbs up for this video, especially if you pick up something from my tutorial for today. So last tutorial that I made was how I pick stocks, so if you haven't watched that, go check that out. But today's topic would be like a continuation of my charting stuff, my charting series, I guess, as well, and tutorial. So yeah, I have my playlist and I have my tutorial series right here if you want to check out all the past ones that I've made. But for today, we're going to be looking at how I use different time frames. So I'm going to be talking about the time frames that I prefer to use, which you guys have probably seen on my videos right above here on this corner. So I mainly have the 15-minute, the 1 hour, and the 4-hour time frame. The 4-hour time frame is essentially like the daily time frame in a way for the Philippines right now, because since the start of the pandemic or before the pandemic, I think they cut the hours that the Philippine Stock Exchange is open for. So now it's only about 4 hours, 4 hours and a half. So the 4H time frame is kind of like a daily time frame now. So it has the same chart anyway. So if you load it up here, I can click the daily. It's the same. So yes, these are my favorite time frames, the 15, 1 hour, 4 hour. And that is because I am a short-term trader. I don't hold my trades for more than a couple weeks. I don't hold my trades for more than a month at times. But I think my longest was about a month. But usually my trades go for like a few days to a couple of weeks at maximum. So yeah, what do I use for my charting mostly? And if you've seen my previous videos, I mainly use the 4H time frame. So yes, I'm gonna go through all of these three and why I use them, and the reasoning behind them. So first up, we have the 4H time frame. So I use my 4H time frame. Let me move this for a bit, right off the shot right there. So my 4H time frame, I use it for my charting. So I switched to the biggest time frame, so that the biggest time frame is very important because it will basically be my charting time frame. Because if it holds for a day, think about it, if it holds for a day, whatever happens right below that, and the faster time frame, it will definitely be almost certainly doing the same thing on those smaller time frames. So like, let's say there was a support area right here that it held up at around here. If you haven't watched my previous videos about charting, you probably should start with that, and I'll link it up there on the card. So yeah, on my charting, basically, when I identify my levels of support and my levels of resistances, essentially what's happening on the bigger time frame should also be happening on the smaller time frame right here. As you can see, the support is around the same area, and if we go even deeper, the support should be around the same area as well. It will just have more context and more candles within them. So yeah, what happened? Let me just reload this. Reload my illustration, chart right here. So yes, when I chart, I usually start off with the 4-hour time frame. So in my including on my last video, when I pick my stocks, when I find a stock that I want to trade or that is trending, I go dive into the chart for it and start with the 4H time frame, because 4H time frame is basically what I use to identify key levels like this one. I also made a video on that, the support and resistances. I should also be tagging that. But yeah, for key levels right here, key levels of support, key levels of resistances, when I chart them, I usually go chart them on the 4-hour time frame, because when you go down to a smaller time frame, they should be able to hold up or be doing the same things, just with more context. So now that I've identified my levels of support here, it was on a downtrend and the resistance is here. So if I go on the 1 hour time frame, my 1 hour time frame is essentially my behavior time frame. So if my 4H time frame is like my time frame for structure and trend identification, when I identify the trend. So when I was in my 4H, I knew that this was on a downtrend right here, right around this time frame. So if I identify this as a downtrend, I would be watching what it's doing on a smaller time frame, whether it's actually still on a downtrend. So the lower you go on a time frame, the more context it will give you and the more precise your entries would be. Because if you wait for a daily candle, sometimes you'd be missing out certain things if you just traded with one time frame. So I like to have three: the 4H for the structuring, and then the 1 hour for the behavior, to see just where the candles are going. I'm watching these trend lines, for example. I watch it here, and then this one also had a connection. So if I'm watching it right here, it should be telling me if it's actually going to that trend line, if it's actually trying to hit that trend line, if it's going to that key level. I'm watching that. My behavior time frame is only for watching whether it's moving towards the key levels that I'm looking at, which are these support areas or these resistances. So I'll be watching those. And then lastly, why are there so many ads? And then lastly, my 15-minute time frame is my entry time frame. So what you saw me do is not touch any of my charts right here, because I charted this on the daily time frame. So whenever I go down to the deeper level, a smaller or faster time frame, it should be holding up. Like these support zones should be the ones holding up. And if they do, my entry time frame is essentially for the faster, more accurate movements, more real time, I guess. So when you're live on the market, I would use 15 minutes if I find like a good setup on the 4H time frame, because if I start there, it should look pretty good. And then if it looks pretty good in the 4H time frame, I'll move on to my 1H time frame, watch the behavior of it, whether it's going down close to my support level, and or whether it's trying to push to this resistance level like it did here. So yeah, behavior of the candlesticks. I'm basically watching the behavior of the candlesticks. So if you've watched my analysis videos, I always specify that if it might push to these resistances or it might push to these support zones. And on the daily candle, I'm watching those if it's actually doing that. And then my 1 hour time frame is essentially for getting more precise action or movement, more context on what the actual move is. Because essentially, if it holds on the 4H time frame, if it's true on the 4H time frame, when you go to the 1H time frame, essentially it should also be doing the same thing. So if the 4H time frame, since it only makes one candle every day, let's say this moved on the upside, within that move on the upside, you would be seeing a lot more candles or a lot more context as to what happened before it got to that move. So you'd see more red candles in between, and then you'd also see those consolidation areas in between. So yeah, and then for my 15-minute, essentially I use that for my entries. So this is also where I look for patterns, for example. This is also where I look for an attempt. If it finally broke the downtrend, this is where I look for the end of a pullback when I'm live trading, when I'm trading live. So 15-minute essentially is more accurate than the 4H, because in the 4H you would only see, or the daily time frame, you'd only see the big move. Let's say one big drop right here. Why is it not loading properly? So you'd only see the big candle right here, for example, from this support area, but within that candle there was for sure a lot of pullbacks as well, and there was a lot of, you know, support consolidation areas. And you know, the lower time frame you go, the more context it just gives you. So yeah, I mainly use these three. This is a short tutorial on how I do things, but yeah, I chart on, just to recap, I chart on the 4-hour time frame. Yeah, if there's like a level of support like this one that I'm watching, I would mark that as my level of support, and then I watch my trend lines, and the 4H is where I do all of that. So yeah, so that whenever I go to the smaller time frame, I'm not going to be changing those support zones, because I'm not looking to chart on the lower time frame. So you have to remember that the 4H time frame is where you do all the charting, so that when you go to the 1H time frame, well, you know that when it hits this support area, it might be the time for you to look for an entry, which is the 15-minute, because it would be a faster, more accurate time frame to look at, and you would not be delayed. Because if you wait for a day, your execution would essentially be delayed by a day. So if you only look at the daily candles, your execution would be much slower. You might miss out on the best price sometimes because it moves huge like these ones. So if you knew that it was gonna hit around this price point again, you could catch this move on the upside. And yeah, this is definitely adjustable. Let's say you don't have the time for, during the day to watch the market, you could be adjusting the time frame. Just pick three time frames that are for structure, for behavior, and for entries. So you could do that. You could easily decide that by finding something that is divisible by 3 or 4. It's a good rule of thumb, like this one, 4 hours. If I divide it by 4 to a faster time frame, that would be the 1 hour, and if I divide by 1 hour, it would be the 15 minutes. So that's my preferred one. So if you don't have the time and you only can check the market every day at the end of the day, you could basically go for the 1 week. Well, there would be 5 days in a week, so if you divide that by 4, I mean roughly around that. So yeah, if you were if you can only trade at the end of the day, or if you can only trade towards the beginning or the end of the day, then maybe your entry would be a lot slower. Maybe you could look at the 1 hour time frame, and then you could look at the daily time frame, and then you can structure on the 1 week. For example, you can structure on the 1 week. If you look at the 1 week, 1 week would be your structuring, and then the daily would be your behavior, because you can only watch towards the end of the day, and then your entry would be the hourly time frame. So yeah, so you just have to like adjust the time frame by the number by 3 or 4. That's a good rule of thumb. I think there was a thing about that. I forgot what it's called, but some guy talked about a good rule of thumb when it comes to picking your time frames. But essentially for myself, I like to have it divisible by 4 or 3 at least. So if I'm going for an intraday, for example, I would be going at 5 minutes, 15 minutes, and then maybe an hour for my biggest one. So if I'm only trading within the day, for example. So yeah, there are different kinds of traders out there, but for me, I'm a short-term trader, and I don't day trade, but my trades usually last around a few days to like a couple weeks max, and then I close my position then. So I don't go for like the big movements. I don't go for like the 10 peso gain, 5 peso gains at a time. Those are more for the long-term investors. But even long-term investors, if you're looking at charts, your biggest charting time frame could be the 12 months, and then you could go down to a divided by 4. It could be the 3 months, and then your entry would be another division by 4, would be 1 week. So you could just choose 3. That's at least divisible by 3 or 4, just so you don't confuse yourself. And then yeah, just remember that the biggest time frame would be your charting time frame. Basically, this is where you're gonna be looking for the structures, the trends, yeah. And then your second time frame would just basically be the behavior time frame. Your second time frame would just be for behavior. You're not gonna adjust your chart that you made on the biggest time frame, and you're just gonna be focusing on where the candlesticks are going, or whether it's going towards your key levels that you've plotted. And then your smallest time frame would just be for entries. So yeah, I don't look at how do you call this, I don't chart on my 15-minute. I would only be charting on the 15-minute if that's your biggest time frame. If you're like an intraday trader, you choose 15 minutes and then 5 and then 1. But for me, my biggest time frame is the daily time frame, because I only hold my trades for a few days or a couple of weeks. So yeah, remember that the biggest time frame would be the charting time frame, and then the second time frame would just be for behavior. Essentially, after you charted, this is basically where you watch for the pullbacks. The behavior time frame would be where you watch the pullbacks, where you watch it trying to hit your key levels. That's it. And then if you find that it's the best time to enter, you switch to your smallest time frame, so you are able to get into it at the best price possible. So yeah, the smallest time frame is where I find those confirmations, those patterns for entries or setups. I'm sure if you're knowledgeable, you'd have setups. I could talk about it on my next video. Comment down below if you want me to talk about my favorite setups, maybe on the next video. So yeah, as always, don't forget to check out my other tutorial videos right here. And then of course I upload my daily top 10, my episodes for the daily top 10, where I analyze stocks technically and objectively. So yeah, stay tuned for that. And if you found something useful for this video, consider clicking that subscribe button and leaving a thumbs up on this video. So yeah, I hope you are able to get something from here. Don't forget to share this video to someone who might need it, to someone who you think should watch it. And if you're someone who's confused on how to use time frames or what to do with time frames, this is definitely something that could help you with that. Those were my basic thoughts on the time frames, and if you have questions, don't forget to leave them down below so I can clarify. But yeah, those are the 3 things, 3 time frames, 3 pretty quick tutorial on what I use if you see me on the daily top 10 show. So yeah, and that's it, I guess. If you have any other questions, you just leave them down below and I'll get to them. So as always, remember to stay patient, be disciplined, and strive to be consistent with your trading. I'll see you guys on the next tutorial video, and that's it for me today.